in infrastructure spending in power and railways, and they'll continue to win, big orders. Now, if you take that through in terms of it's on a P of 45, we think it's on a P of 7 in 3 years' time. Now, if you put it on a P of 15, you can see what's going to happen in the share price. So these are the kind of companies and the powerful theme and operational gearing which will help these companies. If tourism is going to come back, then occupancy rates at the Taj are not going to run around 50%. So they both have pricing power in the future, and the fact that they have operational gearing as their occupancy rates move up. So these are the kind of companies we're looking at, and we're thinking that we're going to launch a fund where we're going to concentrate on about 15 companies which will benefit from this mega supply story, domestic supply story. And it is going to be the theme. There's two themes: domestic supply and operational gearing.
We're in conversation with Andrew Holland of Ambit Investment Advisory. Andrew, we were in conversation about the kind of themes that you were bullish on going forward, and you've actually always been clear on that since, in fact, the beginning of the year, talking about the supply side. But just talk us through, specific pockets. I mean, actually, even before we do that, you mentioned mid-caps, and I want to understand how bullish you are there, because we've actually seen some of them move up dramatically just in the last 12 months. Would you still say GVKTR with the infra theme playing out, which is a little slow at the moment? Is that something you continue to be bullish on, or would you find new things like logistics or some of the other kind of smaller themes that exist at the moment?
Yeah, no, logistics is a great story. I mean, it's unfortunately there's apart from the new IPO, how do you play it? You're playing a small part of a big business of many companies. So logistics is definitely an area. I want to find any company which can supply something, and that can be from infrastructure all the way through to hotels. That's all you're going to hear about over the next 1 year, not just from me, but many people.
Fair enough. Now, in terms of some of the classical themes, Andrew, what are you focusing on there? I mean, when I mean the classical themes, I'm talking about the larger cap space, the IT, the pharma, FMCG. Are these some of the traditional defensive sectors that you would be focusing on? Is it more of the cyclical play? I mean, I know for a fact you've never been that bullish on the banking space as a whole when we talk about the domestic situation, more so from the public side. So which way would the portfolio sound a little bit better skewed? Is it the defensives or the cyclicals, barring banks?
It's cyclical.
Will you be bullish on some of these stories, or would you be waiting, as you said, to see some action?
No, I think if you find a mid-cap, I mean, obviously work on the basis that the management's good. If they're in the right sector with the right products, then why wait? They're going to be a large company in the future, and that's what you've got to be looking at. In 3 years' time, where will this company be? Do they have the ability to take advantage of this supply side story that we're going through? So, we think, if you go to the last bull market, you had companies like a GVK or a GMR coming through. There'll be new companies which emerge from the next 3 years of the bull market, and growth in India, which will be not household names now, but probably will be in 3 years' time.
So that's just it, in terms of the kind of themes you see as you...
I'm less worried about, everyone keeps saying, what's the index going to be? And whilst I see the index going higher, I think the action is going to be, with some companies in the index, mainly the cyclical companies, but it's really going to be outside of the index, and that's where we're concentrating our efforts at the moment. So, Alstom T&D is a company I've mentioned many times. They're going to be the big beneficiaries from, the increase in defensives. I still like the companies, but I can't pay 40 times for 5 to 10% earnings growth. I want to pay 15 times maybe for a mid-cap company who's got growth of 50% compound over the next 3 years. That's where I want to be. That's the space I want to be in. So I'm